Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Russell Rhoads on the line. He's a senior instructor with the Options Institute at the Chicago Board of Options Exchange. He's been in the markets for quite a while after a career as an investment analyst. Russell, how you doing this morning?
Doing very good this morning. Just taking a look at the market, and everything kind of looks red except for VIX, which looks green.
Yeah, let's talk about that now. There's the VIX, there's the actual cash index, and the actual futures. What was the activity like in the futures yesterday?
Well, yesterday, in hindsight, is so easy, but looking at looking at Friday to Monday. Friday, VIX closed under 12 for the first time since October. Or I'm sorry, not October, since August. Good. October, we definitely weren't under 12 this year. And the futures, typically the December futures, because it's a quiet time of year, and there's a calendar effect as far as holidays impacting the calculation of VIX. In December, we always see a little bit of extra pressure toward the end of the month, and it also impacts the December settlement due to slow days around Christmas, the actual Christmas holiday, the New Year's holiday, and also Martin Luther King Day. That actually figures into a little bit of extra headwind for VIX, and it always seems to show up in the VIX futures contracts. But the December future, and like I said before we got going, the December VIX futures usually not at much of a premium relative to the index. It was at about a $1.80 premium going into the weekend, which was a little bit unusual. And looking backwards, it might have been a pretty good signal that
what was fair value?
Extra risk was still being priced in.
What was fair value when it was a $1.80?
Well, we don't. You can't calculate a fair value with VIX because you can't own the spot VIX index.
Okay.
So typically, what you do is you just take a look at what the normal spread has been, and with a couple of weeks to go throughout this year, for the most part, the spread's been closer to a point than $1.80. And again, with this interesting December effect that we see each year, you would actually have expected it to be at about $1 or even less than $1. So the futures were on edge, and the futures were on edge even though we had just gotten past the employment number, and the last thing that we've got on the horizon, I think, before December expiration, or actually the day of December expiration after they settle, is the FOMC announcement. Or FMOC. Announcement. So it was just interesting to see that premium, and I was kind of scratching my head over it, and then look up Monday morning, and the S&P 500 starts selling off, and it's continued through today as well.
Okay, so you saw indications on Friday, and then the activity yesterday kind of confirmed it. Now, a lot of times in this VIX, and you can tell by looking at this chart and also just looking from yesterday, a lot of times you just, like, let's say you were bailing in, rolling in the last 3 or 4 days, you're underwater, and it seems like every time you get these quick pops that it comes right back down.
That has most definitely been the pattern, and there are a lot of traders that have been conditioned to automatically take the other side of any pop in VIX. I was at a conference where volatility was the main topic of discussion back in September, and one of the questions that kept coming up is, what is it going to take for VIX to be at a higher level or sustain a higher level? And it was, the typical response was, when the guys come in and take the other side of the spike, that we get a second leg to the upside. And we actually did see that in October, and since October, we've been at elevated levels. I mean, I know over the long-term history, VIX has been relatively low, but relative to the price activity we've seen in 2014, ever since October, we've been a little bit higher. And I'd been attributing that to a combination of a couple of moves higher in October, and then also we don't have the safety net of the quantitative easing hanging around anymore.
You mentioned an important word there. You said conditioned, and traders, investors have been conditioned to buy the dip. The buy the dip mentality has been rewarding investors for quite some time here. Are you seeing like anything in the options market, in the call and the puts, open interest to say that trend is still continuing, or is there any kind of sign that institutions or individual investors are getting cautious at these elevated levels?
We didn't see quite the volume that we've seen for most of 2014, both in VIX options and SPX options, since we had the dip back in October, which can be an indication that people think the easy trade may be behind us. That's one thing right there. It seemed to have taken a little bit longer for VIX to get back down. Well, it did take a little bit longer for VIX to get under 12, even though the S&P 500 was continuing to make new highs. And I think that's an indication that there might not be as aggressive buying when we see a dip in the S&P 500, which is a really easy statement at this moment. But again, maybe just looking back and seeing the way VIX has been acting over the past few weeks, even though we've been making more new highs in the S&P 500, you can turn that into less aggressive buying of the dips.
Okay. You also mentioned that the CBOE is coming out with something pretty exciting in the first quarter of 2015. Do you want to touch on that?
Oh, absolutely. We have not set an absolute date yet, but there are plans to extend trading hours for SPX options and VIX options. Right now, we already trade VIX futures. The official number is 23 hours and 45 minutes a day, and the intent is to start trading SPX options and index options on VIX over those same hours initially expanding the hours in sometime in the first quarter of next year.
Are you going to go?
We don't have an absolute date yet, but before the end of March, you should be able to get up much earlier and trade SPX or VIX options.
Are you going to do it on a true 24-hour scale, or are you going to kind of do what the equities do, where they close down at 8 and then reopen at 4?
We are going to, as far as like a different sort of session electronically, or
yeah,
I think it's going to be, well, right now the way we do the VIX futures is there is actually a switchover right at 8:30 Chicago time, and they stay open until 3:15, and then we shut down for 15 minutes and then reopen them for the following trading day. And my understanding is we're going to use that same sort of model for VIX options and SPX options, where they trade on the electronic platform right up to the traditional equity market open, which is when VIX and SPX options open now, and then they would just switch over to the other system. And I think the only people that wouldn't be paying attention to that would be the systems people here at CBOE.
Okay, so they will remain open between that 8 p.m. close Eastern time and the 4 p.m. or 4 a.m. open. My partner Des and I have been talking about, eventually, all the equity markets going to a 24-hour scale. Do you see that on the horizon, where all the equities are going to be trading around the clock?
Oh, I can't imagine that we don't continue to move in that direction. The thing that perplexes me, and this is, I work at CBOE, but this is, let's just say this is Russell Rhoads talking instead of CBOE talking. One of the questions I get about expanding trading hours is, why don't we trade equity options outside of normal trading hours? And we have tried that in the past, and it hasn't caught on because the market makers need good liquidity in the underlying market at the same time. I keep throwing out there when we have meetings about what can we do next. Why don't we take a look at maybe opening some of the equity options and ETF options a little bit earlier? Because I'll be on the road for CBOE. I'll have CNBC on in the background, and you see several of the very actively traded equities and ETFs looking just as liquid as during the normal market. So why couldn't we have a basket of options that we start opening a little bit earlier?
Right, and I guess the only thing would be from that perspective would be having market makers and people
Yep.
that are adequately, have the capital to be able
Hmm.
to, sustain markets. I mean, because the last thing you want to do is open up a global market and not have good liquidity.
Oh,
Uh,
exactly.
and that's certainly. I mean, I trade on, I trade the S&P futures overnight on the Globex system, and I mean, there's someone more than willing to take the other side of my trade,
Hmm.
and the stops that I put in, I get little or no slippage on them. Do you have major firms stepping up to the plate that are willing to put their capital at risk and be a market maker during these 24-hour sessions?
Well, we have just as many market makers that are electronic market makers that don't have to physically be here in the building or
Hmm.
down on our trading floor. So, I can't. If they could profit from an expansion of hours like that, I can't imagine that they would not be interested in doing
Okay, excellent point. If there's a profit, you'll definitely see people participating.
Yeah.
Okay, just I know you can't, make individual stock calls or market calls or anything, but just from your observations of the overall market from the Ebola lows in October to the elevated levels that we hit actually, last week on a good unemployment number. We've started to, sell off yesterday, follow through in today's session. You think things are just setting up nice here for a Santa Claus rally, or are you looking for perhaps some of the big boys to book some profits and maybe have an extended Christmas vacation?
Yeah, I feel like, again, and I'll just refer to the volumes, it seems to me that after as you put it, some of the big boys, the feeling I get is that they weathered October, salvaged what's left for the year, and they're waiting around for 2015 now.
Okay.
So
Can I
being as
quote you on that?
subtle and
Can I quote?
being as subtle as I possibly can on that one. It just seems like a lot of participants. When I go down on the floor here, even on days when things are moving around an awful lot, it's not as hectic as you would think it would be. So I think once we got past October, there's some people that are looking to 2015 now and staying on the sidelines until then.
So they weathered the storm in 2014, and what did you say? And looking
Or
forward.
the October storm.
Okay, the October storm, and looking forward to 2015. Well,
Yeah, that's how it feels.
okay, feels a lot in this market. Russell Rhoads, senior instructor at the Options Institute at the Chicago Board of Options and Exchange, joining us on Benzinga's pre-market prep. Thanks a lot, Russell.
Right.
Great insight into the options and the VIX futures, and we hope to talk to you again soon.
All right. Thanks again for having me.